Hey there, welcome to the show. It is Sunday night, December 3rd, 2023. This is the final month of the year. I hope that you've gotten through all of your holiday leftovers last week. I've been spending some extra time working on some changes to the show for starting in January. I think you'll be excited about a couple of things we're doing differently here. I'll tell you more about that as we get closer to the end of the year. But let's get started. This is the end of the month report, and I've got a lot to talk about here. So, as always, you can find the daily market hot sheet at DesMoinesMarketValues.com on the homepage at the end of every day or late afternoon, early evening of every single day. And let's jump right in here before we get into the November information here. I posted this last week on social media. This is a graphic that shows you a breakdown of the dates and where we've crossed over on 1,000 increments in closed sales. And just to kind of help explain this, because I didn't make it very clear when I posted the social media, and I realized that because I see this stuff a little differently than maybe most people, because I kind of know what the numbers mean. This graphic here, it's shows you that bottom line down here at the very bottom here. It says 12K. That's where we crossed the 12,000 closed sale milestone. And so this number up here in peach, or whatever color you want to call that, that represents the number of days it took us to go from 11,000 closed sales to 12,000 closed sales. So that's the number of days since the last 1,000 closed sale threshold. The date is the date that occurred on, and that's kind of the important one here. We'll talk about that in a minute here, but in our particular case here, it was November 28th down here in 2023 when we actually closed more than 12,000 sales. And then the count, this is just happens to be the number of closed sales on that date. So we closed over 12,000, and this is the number. We were 39 over that 12,000 on November 28th. It's just a number I follow and track, and it just kind of gives me an idea of where we're at. So the question I posed on social media was, share your view. What do you see from this? And I got some quite interesting information, or quite interesting comments from that. But here's my take on it. I've been tracking this stat since 2016. That's why it only goes back to that date. And essentially, it's the latest date. In November 28th is the latest date since 2016 that it's taken us to cross that 12,000 sold count threshold here. So November 28th, and just to give you some idea, the previous 3 years were the fastest, 21, 22, and 20. Those were all basically the COVID years, where we were able to cross that threshold in September, and then 2020 was October 1st. But then you go back before that, and you can see that it's 2017, 2018, and 2019, and then all the way back to 2016, where 2016, you can see we were at 12,000 on November 7th, and we were at 11 November 28th. It took us just that much longer to cross over that. The reason why you see some of these continue across is, for example, 2021, we closed over 17,000, and on December 21st in 2021, that's the date we hit just over 17,000. We went on to close more than that because we had another 10 days left in the year. I think we closed 17,400, I think is what the actual close count was on December 31st of that year. So what this tells me is we're probably only going to see one more. Hopefully we'll see. I don't think we'll miss it, but we should see the last threshold close over into that 13,000 closed sales here sometime near the end of December, near the end of the month here. So probably, maybe right around Christmas Day, maybe we might have a couple of days after that when we bump into the 13,000s, but we're going to close somewhere around that 13,000, just over 13,000 closed sales. So, and just to give you an idea of how this looks, again, here's where we are as of November 30th. We were sitting at 12,102 on the last day of the month. And if you go all the way across, that's very similar to 2015 here, where we closed as of November 30th, we had closed 11,768. So we're kind of on that track. For a long time we were tracking 2016, but things kind of slowed down, I think probably because of the high mortgage interest rates. That's why that kind of took a little bit of a slowdown. Anyway, with that, let's jump into end of month review for November. I will say that November was really the month of the fall of the mortgage rates. You know, we've seen really from 2022 on, you know, this is the year over here on the far right here. You can see it right here. This far right, you can see where we've seen mortgage interest rates rise dramatically last year. They stabilized a little bit, and we had a pretty steady rise again this year, but not nearly as dramatic as we saw last year. We ended the month on November 30th at 7.22% mortgage interest rates, and that goes all the way back to 2001, which is you know, still pretty much a major timeline difference there. We've gone for many years and haven't seen that mortgage interest rate. And what's fueling this is basically the Federal Reserve. The last time they increased the Fed rate was back in late July, where they raised it 0.25% to that 5.5% on the Federal Reserve rate, and they have not increased rates since that date. But however, you know, the mortgage interest rates continued to rise after that from economic reasons. And so if you draw this line straight up here from November to the top here, this is the month where we finally started to see mortgage interest rates drop. And this is where the Fed kind of went out on a limb this last week or two and said, it sounds like we're not going to need to raise rates again. In fact, this graphic came from NAR. Dr. Lawrence Yun presented this just this week at another conference, and he's showing that you know, the Treasury, the 10-year Treasury yield is dropping, and basically they're telling the Fed, let's pivot, let's not make any more rate increases. And so while this is not the Fed rate, this is the 10-year Treasury yield, we're probably going to see rates, the Fed drop rates here at least a couple of times here, at least in the next 90 days, I would say, is kind of what I'm hearing out there. So if we get through that, if we get a drop yet in December, which is possible, I think that's going to spark a little more activity as we move into the end of the year. So it's not over till it's over. So I think we're going to see some changes. Now, if you followed me on this show, I've said early on that it's been pretty well proven that homes for sale inventory kind of follows mortgage interest rates, and that's pretty well true here this year. From 2023, you can see where the mortgage interest rates have been on the rise this year. We've seen home inventory levels on a weekly basis going up, and when the rates started to come down that first of November, it took a couple of weeks, but we've started to see now where our home inventory levels are starting to drop a little bit. Now, some of this is just seasonal. We typically do see home inventory levels tend to drop just a little bit before the holidays because people are focused on Christmas and Thanksgiving and New Year's and waiting till the first of the year. But I think that, you know, had the mortgage interest rates not dropped, I think we would have continued to see the number of homes on the market continue to rise, which really basically would have just helped us set the stage for 2024. But it's good to see the mortgage interest rates coming down, even though home inventory levels are coming down with them. So, and just to confirm this is looking at, again, the year over year, looking at 2023 versus the last 2 years. And you can see that we typically do see a little bit of a drop, a little more of a drop here. You know, basically this year it's kind of tailed off fairly quickly. And then you get into December and it tails off pretty good. So I just kind of expect this to kind of continue to go down. I don't think we're going to get under 3,000 before the end of the year. It'd be a surprise if we went back under 3,000 homes for sale, but right after the first of the year, if mortgage rates are really down, home buyers will be back on the streets buying, and that could push our mortgage or our home inventory levels back below that 3,000 again for a little bit. But I do think that we're going to see the number of homes continue to outpace these last couple of years, and we'll see the next year's numbers above these. So So back to the end of month report, this kind of shows you the breakdown of where the inventory is versus the same time a year ago. The green is broken down by these $100,000 price points. By far, the bulk of our inventory, this is all homes for sale, is in that $300,000 to $400,000 price point. Currently, we have, as of November 30th, we had 979 homes for sale in that price point versus 892 a year ago, closely followed by the $200,000 to $300,000 price point underneath there. Really, it's this lowest bottom graphic that always alarms me a bit. Only 92 homes in the currently in the Des Moines Area Association of Realtors MLS for sale as of the end of November. At least we're above where we were a year ago with only 59, but we do need to see these lower inventory price points increase if that can happen, to help kind of jumpstart the move-up buyer process in the spring. This same graphic, looking at it from the perspective of sale pendings, again, the bulk of the pending sales here are in that $200,000 to $300,000 price point versus the $300,000 to $400,000. And below that $100,000 to $200,000. They're both behind last year's at this same time. In fact, you really don't see, other than the under $100,000 price point, you have to get up in that $300,000 to $400,000 price point and up before you start to see more sale pendings than where we were a year ago. A lot of this is new construction as we get up in here above that $300,000 to $500,000 price point. As always, I break down the metro here. So this is available at DesMoinesMarketValues.com. It'll be in the show this week, both in the weekly show graphics as well as if you go back to Des Moines Market Values, you can look in the show graphics and see the November graphics. You see about 35 or 40 graphics in there with the show stuff. So this is a breakdown of both active as well as pending sales across the metro. And of course, these graphics are also broken down by existing homes, existing condos, and then the new construction subsets as well. So there's a lot of breakdown information that's on here that's not being shown on today's show, but you'll see it at the show at the DesMoinesMarketValues.com. I do like to show again here kind of the months of inventory. This kind of puts a exclamation point on the pace of the market here. Red means that we're in a buyer's market favoring home buyers, and that is dipped all the way down to that $300,000 and up price points. Once you get below that, the $200,000 to $300,000 price point is kind of in a balanced situation right now, where if you can find something in that price point, there's about 3.2 months of inventory. In other words, if no new homes come on the market, we would sell out of all the homes in this price point in 3.2 months. That never happens, obviously, because we're always adding inventory. And of course, the seller's market is all the way down under that $200,000 price point with such a lack of inventory. I believe this might be the last graphic here. This is the listing activity status compared to a year ago at the same time. Again, just giving you an idea where we are sitting overall for the month of November. This is a total for the month of November, not the end of the month. So this is how many listings we brought into the MLS. In November, we brought 787 versus 803. So we're a little bit behind adding inventory in the month of November itself. Even though inventory is up, we have a lot that hasn't sold. So that's why the inventory is kind of rising, even though it appears like we should have more new listings. Pending sales are down compared to the same time last year. We only put 724 homes under contract versus 787. Closed sales, as a result, are going to be behind as well. 805 closed this month versus 925. We're still seeing fewer price increases, only 117 price increases versus 1,110 price reductions. However, that is more increases this year in the month of November than we saw last year, and fewer reductions than we saw compared to the same time last year. So I think a lot of homeowners are seeing the mortgage interest rates kind of maybe start to drop a little bit and saying, you know what, let's see if we don't need to do a price reduction right now. I think they're going to change their mind as we move into the slower month of December here, but at least for the month of November, there were fewer price reductions. And then, of course, the balance of the listing activity status. So anyway, that's the show this week. I appreciate you joining me every Sunday night. If you're getting this live by subscribing to the YouTube channel, please do that if you haven't done it already. In the meantime, you can always find me on social media at Simply Des Moines Stats on Facebook. Go to Simply Des Moines Stats on Facebook, and I'm pointing a URL, should be pointing just SimplyDesMoines.com should be pointing to the Des Moines Market Values site as well here soon. So I'm moving some URLs around. So anyway, I'm looking forward to the end of the year. We'll have the January report will show, or sometime early January, we'll have the end of year report and a new show format, as I always try to upgrade the show format each year. So with that, thanks again for joining me, and we'll talk to you all again next week. Be safe.